Welcome back. You're watching The Money Show, and it's time to answer your portfolio queries. I'm joined by Gautam Kalia, Senior Vice President and Head Super Investor at Sharekhan by BNP Paribas. Gautam, good evening and welcome to the show. I'm also joined by our first viewer, which is Kuldeep. Kuldeep, hi, good evening.
Good evening.
Thank you so much for sending us your question, Kuldeep. And you want to invest 10 lakhs as lump sum, and you're already doing an SIP in Parag Parikh Flexi Cap, Nippon Multi Cap, ICICI Nifty Next 50, and Quant Small Cap. Is that right?
Yes.
So, Kuldeep, the SIP portfolio is for how long? For how many years you want to be invested?
So I have a horizon of at least 5 to 7 years.
Okay, and for the lump sum, is it the same time horizon?
Yes, for the lump sum, the horizon is again 3 to 5 years.
3 to 5 years. Okay, so you can't take
Yes.
much of risk for that particular amount. Any special goal that is lined up?
So it's a part of my diversification on the asset allocation per se. So considering the some part of the funds is coming from my own savings, and the other part is coming from my parent savings. So just to have some
Okay.
kind of asset allocation and diversification, and to have
Okay.
after 3 or 5 years, once the funds have been matured, we would want to have systematic withdrawal plans from those mutual funds. So that is the idea. Going ahead, we would want to put in the lump sum so that the
Okay.
SWPs can also happen after 3 or 5 years.
Okay. Okay. So for 10 lakh rupees, you're looking at capital protection. Okay. And you also looking at an SWP after 3 to 5 years. For your SIP,
Correct.
you have a time horizon for 5 to 7 years, and that is primarily for wealth creation, which is your goal and not your parents' goal, right?
True. Yes.
Okay. All right. So let's go ahead with your financial planning, Gautam. Now we have some clarity. First, let's talk about investing 10 lakhs and how can they do it in a staggered way? Any hybrid strategy?
Yeah, thanks, Kavita. So yes, one way is to invest through a staggered approach to minimize risk of market timing. And that is one clearly one way. Since the time horizon is less than 5 years, it's between 3 to 5 years. I would not suggest them go completely into equity. Typically, we tell clients to invest in equity when they are investing for 5 years or more. So what I would suggest at best, I mean, the most aggressive portfolio I would suggest is a mix of hybrid funds and multi-asset allocation funds. Typically, if you just create a portfolio of 2 or 3 funds, that should be enough. I'll just give you the fund names. For example, you can have a large cap fund like ICICI Prudential Large Cap, which is a pure equity fund. You can add a Mire multi-asset allocation fund to that. So that's a multi-asset fund, and the third can be like a HDFC Balance Advantage or a ICICI Prudential Balance Advantage fund. So you have a combination of equity and debt as well. So those are the funds that you can look at, and I would still suggest look at least 4 to 5 years if possible. The second, that you can invest in the multi-asset as well as the balance advantage. You can invest immediately. Otherwise, if you still want to reduce your risk, obviously when you reduce your risk, then your expected return also comes down. So if you reduce your risk, you can do a systematic transfer plan into these schemes. So that way you avoid risk of market timing, and you can stagger your entry into the equity market over a period of 6 to 9 months. Now I'll just quickly come on the SIP part. SIP, I see the portfolio doesn't have any large cap allocation, a dedicated large cap. There's only one index fund. And otherwise, if I look at the allocation, it's heavily skewed towards flexi cap, multi cap, and small cap. So just a couple of changes I'd suggest. The Parag Parikh flexi cap fund maybe reduce the SIP value there from 15,000. It's 15,000 SIP amount, maybe reduce it down to 10,000. And Nippon multi-cap fund there, the 10,000 maybe reduce it to 6,000. So you got 4,000 saved there and another 5,000 saved from Parag Parikh. That 9,000 you should start SIP in ICICI Prudential Blue Chip Fund. So that way you can increase your large cap exposure as well. So that's what I'd suggest on the SIP front.
All right, Kuldeep, I have you on the phone line with Kuldeep.
Yes, yes, ma'am.
Yeah, you want to ask anything more?
Yeah, so I have not been exposed to small caps, but then from this month onwards, I have initiated my SIPs on small cap, on the quant
Okay.
small cap. I would want to have a piece of mind share from sir on should I stay, considering the choppy waters which the
Sure.
small caps are now going to face, as at least I am
Hmm.
assuming. So, and now
Hmm.
that the timing of my SIP, should I continue with this SIP, considering that
Hmm.
the horizon is 5 to 7 years?
Sure, sure. Well, you already have an exposure to small cap through a flexi cap and multi cap, but then the flexi cap is largely large cap bias. So, a separate small cap fund will not be bad if you are planning to stay invested for 5 to 7 years. But then, yeah, Gautam?
Yeah, so he's already got a small cap where he's investing 10,000 rupees a month on small cap fund. See, you're anyway minimizing or let's say reducing your risk by doing a staggered entry through SIP. And you are anyway also addressing risk by looking at an investment horizon of 6 7 years. So you're doing enough as far as risk management is concerned, and obviously the fund manager is also doing his bit to manage risk. So I think you're sorted. I don't think there is need to do additional any timing related activity. It's better that you stay the course. Just keep in mind tomorrow if there is this correction in the small and mid cap space, you shouldn't be reacting. In fact, you should probably look to increase your SIP value then. The mistake that most investors make is that they react by withdrawing their money then, and you end up essentially selling low and buying high, and that's exactly what you want to avoid. So just continue buying. It's only time will tell that. It's only with the benefit of hindsight you'll come to know whether you bought high or not. So definitely don't sell low.
Let's move on to John Daniel's question. And Gautam, he is investing in HDFC Top 100, Sundaram Mid Cap, UTI Flexi Cap, Nippon Small Cap, Nippon Multi Cap, and he wants to know if this fund mix for him is right or not. We don't have the time horizon or we don't have any other details. Yeah, but then how is the fund mix?
Yeah, so as far as the fund mix is concerned, again, I see a larger allocation towards mid and small cap. So some minor changes there. So HDFC top 100, you got 15,000 going, great, you continue that. Sundaram mid cap, you got 10,000, and Nippon small cap, you got 10,000. So here you can remove 2,000 and add that to your HDFC top 100. So your HDFC top 100 should go from 15,000 to 19,000, and Sundaram mid cap and Nippon small cap to be reduced to 8,000 per month. Nippon multi cap is okay, 10,000, and you've got UTI flexi cap. Instead of UTI flexi cap, I'd suggest you take a look at HSBC flexi cap fund. I think that's preferred by our research.
Move on and let's take Rajesh's question, and he wants to know if he can do a partial withdrawal from NPS for child's admission to nursery or LKG classes. So we know that partial withdrawals are now allowed in NPS, but then those are very case specific scenarios, and the withdrawal is also available post, I think, 3 years of opening the account or 3 years of investment in NPS. Gautam?
Yeah, so you can withdraw maximum of up to 3 times, and you can withdraw up to 25%, and there is a whole host of reasons that you can use to withdraw that amount. But child education in LKG is not one of the reasons. If it's higher education for your child, then you can withdraw. So higher education, marriage of your children, there, I can read out the list. It's about 8 9 points. But on that point, you will not be able to withdraw for that reason.
Gautam, how much will be the partial withdrawal amount? 25% of the entire corpus accumulated?
Yeah, so 25% of your contribution, total contribution. At
Total
any one point. Yeah.
Right. All right, Gautam, I think on that note, it's end for the show today. And thank you so much for being on the show and helping our viewers with their financial portfolios. And just in case you want to send across your questions, you can also do that via WhatsApp number and email ID so that we can do your live financial planning on the show. Thank you so much for watching. Goodbye.